everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 19th of May, 2017. Thanks for the people who participated in the Schwab event yesterday, actually. That was a great event, and thank you to the Schwab group. Let's take a look at this market. The numbers here first. We're only down 33 basis points in the S&P 500. The Russell 2000, which has been the persistent laggard this year, lost a 1.5% and is very close to going negative year to date. And we saw that the biotechs, another lagging group, had a bad week and so far a worse month as well, showing once again that it pays to be in the winners. The semiconductors gained ground this week, and they continue to outperform as the weaker groups underperform. So let's take a look at the charts here and make some sense of it. When we look at the daily chart of the S&P 500, you can see that we're still clearly in an uptrend. We've got trend lines we can draw that confirm that. We have moving averages that are rising that confirm that, and we have what I think are a couple of important levels, such as the year-to-date volume-weighted average price. I think that's going to be a very important level to keep an eye on. It's held as support a couple times this year. That is, we found buyers in that area, and you can see that it really rode that volume-weighted average price year-to-date early on closely as it broke away. It tested it a couple times, and now we've been above for a while. If we get a pullback down towards 234, it won't end, the so-called Trump rally. If we take a look at the Trump rally, that won't end until the average price is below 230 right now. So when people say the Trump rally is over, I don't buy that. I look at it and say, since the election, the average price for the S&P 500 is 230. That means the average long participant owns it at 230, and they're still at this point up about $8 on that trade. So how can you call it over when it still is working? The intraday time frames. Let's take a look at a 30-minute chart. We'll start out with, and we'll erase those levels in there. What we saw, of course, let's actually bring it down to a 15-minute time frame and see if I can get everything. No, we'll go back to the 30 because this was a prior band of support that maybe is. I look at it as it's green over here. It turns yellow, and we're still in that yellow mode because we have that declining 5-day moving average that we are below. But there's positives here from an intermediate term standpoint as well. One, the volume weighted average price since the event, since the gap down, we are still well above, and we are above the volume weighted average price from the low, of course, and we're also above the volume weighted average price week to date. So I think that next week this will become an important level, and I plan on keeping a pretty close eye on the volume weighted average price since the event, that of course being this gap lower. If we break below that and then we start to see that hold as resistance, then this bigger support might end up looking at it as resistance. So we've got to be cautious. We've pretty much made it through earnings season right now, and that's not a big event. But overall, the longer term trend, we are still in an uptrend. We've got a rising 10, 20, 30, and 40-week moving average, and that's not typically when you see markets turn to a bear market. We're still in a bullish market environment. For the NASDAQ, as I said, we did gain some ground there this week, we lost less. We lost about a 0.5 percentage point in there, but still, the clear leader, and the volume weighted average price year to date is way down at 131-ish, and here we are 6 points above that. So even a pullback to the 50-day moving average, which is rising, and that hasn't been touched since the middle of last month. But if you take a look at a volume weighted average price since the event being the last time we touched that 50-day moving average, look where we found the buyers this week, right in there at that volume weighted average price level, and we've bounced. Right now we're below the 10-day moving average. Not a big deal, but when we look at the 30-minute time frame, let's look in here. We have the volume weighted average price since the event. We're still above that, so I would only become I'm right now cautious because we're still below this declining 5-day moving average. But when you look at the bigger picture, it's very difficult to become bearish on this market. So next week we'll be looking at the volume weighted average price as it progresses throughout the week from this level, and the Russell 2000 continues to be the laggard. So if we take a look at the Russell 2000 and just back it up a little bit in here, I think I drew this in the other day that we're kind of in this upward channel really, and the higher highs and the higher lows here. We've been grinding higher, but we've got just a big mess in here. What's been important so far is the year-to-date volume weighted average price, where you can see we found resistance on today, and then of course the volume weighted average price since the election has been a level that has consistently found buyers on these pullbacks. Actually right here, here, and there, and once again here. So we're coiling between those levels, and I view this as, realistically, the Russell 2000, everyone's talking about how weak it is. It's not in a downtrend. It's not declining. We still, the bigger level is right down here near 132 or so. If we find resistance that cannot be broken in this area, and then we come down to this level, maybe bounce a little bit and then break down, then the Russell 2000 will be something that'll be very troublesome, because we've got this big air pocket in here where very little trading occurred, and it could get ugly under there. So that's a key level to keep an eye on. But you can see we're also, we've got a rising 20, 30, and 40 week moving average, and a longer term from even right here, kind of drawing in the essence of trend from this, these 2 points. Or we could say, do we take a trend line that looks like that? We're still in an overall uptrend. It's just been building energy. Is it building energy for a breakout, or is this distribution before a decline? Well, so far, all this market's done this year is frustrate the short sellers and who short on weakness, and frustrate the chase buyers on that breakout there. So we're back in the midpoint of the range, realistically, coiled between two important volume weighted average price levels. I'm not going to predict what happens here. It's basically neutral on the bigger time frame, whereas the semiconductors continue to be the big leaders here. The volume weighted average price from their recent pullback still well below the market, and in here we had seen that that was an important level from the year-to-date volume weighted average price. So I would think that the next pullback that we see, this volume weighted average price from mid-April, will likely become important. But this market, this group rather, for the week was up another percentage point, and people like to try to short something because they think it's up too much, and they try to buy something because they think it's down too much, and that's the wrong way to do it. The biotechs, as we said, had a rough week here. They lost ground. They do still stubbornly somehow hold above that year-to-date volume weighted average price, which has been important pretty much for the last 2 months. So I think that if we see that level with basically this 285-ish level broken, then we're likely to see further downside. Since the election, that could be the next objective on the downside, if we get down to, if we break below 285. So it doesn't look like a lot of downside in here, especially when you back it up on the weekly time frame and see how long this base is. But I think that you've got to look at it cautiously. There doesn't seem to be any compelling reason to own biotechs as a group right now. Let's take a look in here. So what we're going to need to see, this will continue to be the important level, 295.5 to 296. If you look at the financials, the XLF, the volume weighted average price since the election right here is giving us reason for concern. I think I spoke about this with Lee Bowl at Schwab yesterday, that this is looking like a big head and shoulders pattern. And the thing about head and shoulders patterns is that a lot of times they fail. I've pointed this out numerous times, that they suck people in here with the perfect looking pattern, and then it moves back higher. What we need for a head and shoulders pattern to really take hold and become bearish would be it breaks down, comes back, retests it, then breaks lower. That to me is more important than the first break. So if it were to break the measured move, we could say that the height, just being very conservative, at 25 and the low at the neckline at 23, it would imply a price objective down near 21, which isn't hard to believe with all this big air pocket in here on the financials. I know a lot of people watch NVIDIA, and rightfully so. It's been a huge winner and market leader, and interesting where this stock pulled back to on Wednesday. Pretty much the precise low was the volume weighted average price since the earnings. So I think that's going to be an important level. There seems to be a lot of people trying to pick a top in this stock. It's got strong momentum. I think that from an intermediate term perspective, the low of this week is going to be very important, and keep an eye on that volume weighted average price since the last earnings report. Hope you had a good week, and I will talk to you again next week. Thank you.